Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want to follow me on Instagram, you certainly are welcome to. You can find me at Richard Fain, Millionaire Mentor. Just be careful over there on Instagram, guys. Lot of impersonating scammers trying to impersonate me, slide into your DMs and ask you to send them money to invest for you. That's not me, guys. I don't invest money for my subscribers or anybody else other than myself. I'm not going to ask you to send me money to invest for you. So please be careful on Instagram, but I'm trying to rebuild my Instagram profile. You guys remember last year I had about 90,000 people on my Instagram page following me. Instagram shut the page down, and I think they shut it down because of impersonating scammers. So I'm trying to build that back up. So if you don't mind, go over to Instagram, give me a follow. Now, if you're not sure, go down to the description box and you'll see my Instagram link in my description box of this video. You'll see the Instagram link down there in the description box. Just go down to the description box in the video. Click on that. That'll take you directly to my Instagram. No other Instagram, just one, just that one. If you want up to 15 free stocks, Moomoo is going to give you up to 15 free stocks when you open a new Moomoo brokerage account. They're going to give you up to 15 free stocks for just trying out their brokerage app. When you put $100 in your new brokerage account, they're going to give you 5 free stocks. When you put $1,000 in your new brokerage account, they're going to give you 15 free stocks. Now, guys, this is a limited time offer. It's not going to last forever. So don't delay. Get started today. Go down to the description box and click on that Moomoo link. Open up your new Moomoo account. Go get that free stock. Go get that free money. If you send me an email and let me know you've opened the Moomoo account, I'm going to send you my wealth transfer blueprint, which is my blueprint to double my net worth over the next 10 years using 3 big boy blue chip paper assets. I'm going to send you a video that outlines those 3 powerful investments. Now, again, that's my opinion. I'm not telling you I'm your financial advisor. I'm not telling you what to do. I'm just saying if you want to copy my plan, you can. Just send me an email and I'll send you the video outlining what I'm doing to double my net worth over the next 10 years. And you can certainly copy my plan or come up with your own plan. Also, if you're brand new to using brokerage apps and you open the Moomoo brokerage app, same thing. Send me an email and say, hey, Richard, open my Moomoo account. I funded it. Send me the Moomoo tutorial video to walk me through how to use the brokerage app to make my first trade. And I'll send you that Moomoo tutorial I did. Again, it's not meant to teach you everything about the Moomoo app. It's just meant to give you a quick little tutorial on how to use it so you can start buying paper assets to build wealth. The Moomoo app itself has everything you need if you know where to look to find it. It has a bunch of in-app tutorials, all kind of education for you guys who are brand new and just trying to learn about stocks, ETFs, and other different ways of investing with the Moomoo brokerage app. They have tons of stuff there. My video just helps you get to some of that stuff. It collapses time frames for you and gets you to the information you need right away. So listen, if you want to build wealth, guys, there's no better opportunity than right now. Let's get all the excuses out of the way. Let's get all the procrastination out of the way and just dive in and start building wealth. But you can't do that without a brokerage app. So I'm rocking with Moo. If you want to rock with me and sign up for Moo, go down to that description box and click on that Moo link. Well, guys, we got a lot to cover today. We're going to talk about this increase in 401k withdrawals, which includes stocks and crypto, and people are just cashing in. It's panic selling, guys. But honestly, it's because they have to. I call it panic selling, but a lot of these folks got no other choice. We're going to talk about that and tell you why people are just emptying their 401ks, including their stocks and their crypto. They have to, but we're going to talk about that. Then we're going to also cover just stocks in general. What's going on? We do know the Federal Reserve is going to have their March 19 and 20 meeting. Starts tomorrow, guys. And if you're an investor and you're trying to build wealth, you need to know what's going on when it comes to that meeting, because they're going to tell you a lot about what's coming. Remember, I told you guys, these meetings for me is like looking into the future. See, the Federal Reserve chairman, when the FOMC meet, it's just like them giving you little financial breadcrumbs that lead to the future. It tells me what's coming. And I know how, as an investor, I should position myself to take advantage of that information. But if you don't tune in and you're not paying attention to it, you're going to miss it. You're not going to know what's coming in the future because you didn't pay attention. Now, of course, I'm going to be on the YouTube channel giving y'all my little 2 cents of what happened during the meeting and what the Fed chair said. But you got to get in the habit of looking at this stuff on your own. You can't just depend on somebody to always spoon feed you. And I'm not saying I'm spoon feeding any of you guys. I know you're here because you're trying to learn, and that's great. But I'm trying to, again, I want you to learn how to fish, not just be given a fish. See, someone gives you a fish, they feed you for a day. They teach you how to fish. You feed yourself for a lifetime. So my goal here is to provide you with financial education, but it's also to get you to a point where you become in tune to what's going on in the market on your own. You know how to go out and do your own research when you want to look for something. You know how to take a look at this Fed meeting and determine, okay, the Fed is saying this is what they're getting ready to do with interest rates. I know if they reduce interest rates, the stock market goes up. I know if they increase interest rates, the stock market goes down. So it helps me move better as an investor when I know what these people are getting ready to do with interest rates. So these next 2 days, man, Tuesday and Wednesday, try and catch some of that meeting. You can do it via online. The most important part of the meeting for me, though, is going to be on Wednesday at 2:30 p.m. Eastern time. That's when the Fed chair will come out and give his comments and kind of give a synopsis of the 2-day meeting. And then people in the audience, typically journalists, financial journalists in the audience, will ask him questions. And then he's going to answer those questions. Guys, that piece of information right there at 2:30 p.m. Eastern time on Wednesday, March 20th, don't miss that. And if you do miss the live portion of it, catch the replay portion of it, because that's going to tell you what's getting ready to happen. So be ready for that meeting this week. Now let's dive into this 401k withdrawal thing that's starting to happen. It is starting to explode, guys. And we're going to discuss that. Let's start with an article that I read. And here's the title of the article. 401k hardship withdrawals hit record high last year, 2023. And rebuilding for retirement could be tough. I mean, that title right there tells you guys something is happening here. Something is happening. You guys know I talk about these two economies, this boom economy and this bust economy. See, 1%ers participate in this boom economy we got going, but most folks, the 99%, are participating in this bust economy. And that's why you're starting to see people just liquidate their 401ks. Inflation and high interest rates are hitting many people's pockets, prompting some to dip into their retirement plans to pay their bills. See, I tell you guys all the time when we're talking about these two economies, the 1%, their whole goal is to keep you down in the bust economy, where you're struggling paycheck to paycheck, where inflation is outpacing the increase in your wages. That's why people are liquidating 401ks. They ain't got enough money to live. Let's keep reading. According to Vanguard, now see, Vanguard is a well-respected investment company, guys, one of the biggest in the world. According to Vanguard, a record high 3.6% of workers took hardship distributions from their 401ks in 2023. But it comes at a cost. If someone takes money out of their 401k before they're 59 and a half years old, they must be prepared to pay the heavy taxes and 10% penalty for withdrawing early. That's crazy, guys. You get hit with so many penalties. Now, back in the pandemic, they gave you a little bit of a break. They said, listen, we're not going to hit you with the 10% penalty because we're in the pandemic. But you still get hit with ordinary income tax, right? So whatever your tax bracket is. Let's keep reading. Andrea Scott, the founder of Brownstone Tax and Financial Services, said Generation X, people born between 1965 to 1980, that would be me, right? That would be many of you guys, are the first generation to face the risk of limited Social Security. So what they're telling you is people are hitting their 401ks because they have to. They're running out of money. They're also telling you Social Security may not be there in this full impact like it has been in the past. They're telling you right now, 1965 to 1980, which they call Generation X, are the first generation to face the risk of limited Social Security. So you're not going to get the full benefit of it. Now, this is what they're speculating. No one says that's going to happen. I'm just telling you what they are speculating. According to a report from the National Institute on Retirement Security, 40% of Gen Xers have $0 saved for retirement. Come on, man. Come on, haven't I been telling you all that? Haven't I been telling you 100 million Americans don't have no retirement savings? We got 350 million people in this country. What's 40% of that? That's more than 100 million. I've been telling y'all for years, over 100 million people have no retirement savings. Yeah, they're backing that up. Exactly what I've been telling you guys. Generation X is the first generation to shift away from pensions, especially in the private sector. So what they're talking about here is prior to what they call Generation X, prior to that, when people retired, guys, their company or the government gave them a pension. No, that doesn't happen anymore in most cases. Most of us work for the private sector. So therefore, the private sector has said, no, we're not going to pay y'all pensions anymore. We're going to give you 401ks. Now, whether you invest in that 401k or not, that's on you. If you don't want to put no money in it, we ain't going to put no money in it. But we're no longer going to be taking care of you people when you stop working for us. We're not paying you a pension for the rest of your life. We're going to put that back in your court. And that's when they created 401ks, guys. Retirement accounts, right? That's what they're talking about here. But Scott said saving for retirement is even more challenging since many employers do not offer match contributions. And that's correct. Some employers offer a match. So if I put in 6% to incent me to put in my 6%, they'll say, well, okay, Richard, you put in your 6%, we're going to give you 6% of ours, and they call that a match. But some employers don't even offer the match. So most people they're not even incentivized really to participate in the 401k program because there's no match. That's what she's saying here. So the issue of saving for retirement will only get harder for the generations to follow. I'm a Generation X, and the generations that follow me, it's going to be worse. Why? Because there are no more pensions. She's telling you Social Security is going to be limited. So if you're not investing, guys, and building wealth through retirement accounts, taxable brokerage accounts, you're going to be in trouble. You're going to be in trouble when you get to the golden years. When you get to be my age, you're going to be in trouble. So that's the reason why, guys, I encourage you every single day to become an investor and not a consumer. You stay as a consumer thinking the government going to take care of you, thinking somebody going to give you something. They're telling you right here, that ain't happening. Social Security will be limited. If you're lucky, you get a couple $1,000s a month in Social Security. If you're lucky, guys. That's if you're lucky. Let's keep reading. If a person is taking $5,000, $6,000, $7,000, now you have to try to rebuild that back, she said. And we already don't know how long it took them to even put that amount of money in their retirement account. So what's happening is people already are underfunding their 401ks. They're underfunding their retirement accounts already. They're underfunding them, right? So they're not even maxing them out. So the little bit of money that they are putting in is what she's saying is they are taking that little bit of money out. You're talking about people 40 years old, 50 years old, 60 years old. They're just taking the money out, right? And using it to live. The problem is you're taking more out than you're putting in. At some point, you run out of money. When you take more out than you put in, you run out of money, guys, at some point, right? At some point, you run out of money. She said, you already know how long it will take to even put the money back in their retirement account. She advises 18 and 19-year-olds to take action now by setting aside $50 from their paycheck to go into their retirement. Haven't I been telling you guys that? I've been telling you guys, you ain't got to you don't have to have a whole bunch of money to start saving for your golden years. You don't have to have a whole bunch of money to start saving for your retirement or for whatever you call it. I call it financial freedom. I'm saving for my financial freedom. I don't care if I got $25. I don't care if I got $50 a month to invest. I'm investing it for my financial freedom. Because I'm telling you guys, it don't catch up to you till it catch up to you. This is exactly what this lady's saying. She's saying she advises 18 and 19-year-olds to take action now by setting aside $50 from their paycheck to go into their retirement, or what I like to call my financial freedom fund, my pot of gold at the end of the rainbow. She's telling you that, guys. And this 18 and 19, that's great, but this is for any age, especially if you're under 59 and a half. Why wouldn't you do it, guys? I'm already telling you, Social Security is not going to save you. There are no more pensions. Now, if you work for the government, some type of municipality, potentially like if you work for the state, if you work for the federal government, yes, they are still doing pensions. But in the private sector, I go to work for Walmart, I go to work for UPS, I go to work for Amazon. Ain't no pensions at them places, guys. I don't care if you put 30 years in at Amazon. You ain't get no pension. What you're going to get at Amazon is the ability to put some money in a 401k, and they will match the money that you put into a certain dollar amount. Now, if you decide I ain't putting nothing in, guess what? You can work there for 30 years and ain't going to have no retirement. You're not, because they're not giving you a pension no more. None of these private sector companies are giving pensions, guys, right? The only people still giving pensions is, like I said, the municipalities, like the federal government or the state government. Now, if you're a police officer, if you're a fireman, if you're a teacher, those type of professions are getting pensions. But they're not even getting enough to take care of themselves. They still have 457Bs and that kind of stuff, along with the pension, right? So all I'm telling you is private sector is not giving pensions. So you can work for a private sector company all your life if you want to, and don't save nothing. You're going to be dead broke because they're not going to give you a pension. That's what she's telling you here. So no matter what age you are, especially 59 and a half or younger, you should be taking money every single month, putting it into some type of retirement vehicle, pot of gold at the end of the rainbow vehicle, financial freedom vehicle, something, right? They're putting the ball back in your court. No longer are these companies taking responsibility for taking care of you when you don't work for them no more. They're not doing that no more. They're saying, listen, take care of yourself, take part of your salary and start investing. That's what they're telling you. So pay attention. The day and age to try to get a second income, this day and age, try to get a second income. So she's basically saying, get you some multiple streams of income, whether it's a small business or you can take a small part-time job just to be able to put money into your 401k. Haven't I been telling you guys this for years? Who've been rocking with me? Guys, it's all about multiple streams of income. If you don't have multiple streams of income, guys, you're setting yourself up for financial disaster because you're one paycheck, 2 paychecks away from financial disaster. You better have multiple streams of income. We already know a lot of these companies are laying people off, and they will lay more people off as artificial intelligence gets better. Once these companies, these private sector companies have the ability to put robots in where you used to work, they're going to put robots in. They don't care anything about you. All they care about is profitability and their shareholders and their highly paid executives. Don't care nothing about you. If they can put a robot in there for free, they're going to put a robot in there and going to give you your walking papers. So you better have multiple streams of income, and you better start taking that money and putting it in a nest egg and some investments to grow for you. Because these people in the private sector, they don't care anything about you. It's dog-eat-dog world out there, man. So she's telling you, just like I've been telling you, get you some secondary sources of income. Get your multiple streams of income so that way you can invest more. Haven't I been telling you guys that? Hey, I told you, if you have to, work 20 hours a day, sleep 4 hours. Go to your primary job, get off that primary job, go get you a side hustle, door dashing it, Ubering it, right? Whoever, whatever. You got to have multiple streams of income so that you can put your money in investments to control your own financial destiny. You never know when these private sector companies are going to fire you. I'm just telling you guys, that's the real world we live in. We got to get out of this fake world we live in that everything's okay. Nope, nothing bad ever happens. Got to get out of that world. The real world is these people don't care anything about you. They will fire you in a minute. They get some robots in there. I'm telling y'all see what's going on with AI. Y'all see what's going on. These people going to build robots and they're going to put robots in there. You already see some fast food chains have restaurants in certain areas in the country. They don't even have human beings in there. Don't even have human beings in the fast food restaurant. Haven't you noticed, guys, when you go to a fast food restaurant these days, who do they pay attention to first? The person that walks into the fast food restaurant or the people in the drive-thru? Who gets the first service? The people in the drive-thru. Why? They don't, because the whole system is being set up so that they don't have to have human beings in their restaurants at all. It can all be done through the drive-thru, through robots. Just telling you, it's coming. It's coming. So all I'm telling you is prepare for it. Be ready for it. Get your assets up. This lady is telling you the same thing. Let's keep reading here. So that's where we're at on the 401ks. People are liquidating their 401ks. Because they have to. They're liquidating, guys, because they have to. I keep telling you guys, If you are not building assets, you're not going to set yourself free. You're going to stay in bondage over here in the matrix. See, in the matrix, they don't want you free. See, in the matrix, they want you in financial bondage because that's the way they can control you. I'm just telling you. That's the way they can control you. They want you in the matrix, living paycheck to paycheck, no retirement savings, no emergency fund, excuse me, high interest rate credit card debt. That's where they want you at. They want you in the matrix. They want you as a consumer because they know if they can keep you as a consumer, guess what you're going to be doing? You're just going to be spending money. You ain't going to be saving anything. You're not going to be investing anything. See, if they can keep you there, they control you. They control you. Now, they know if you go over here and become an investor, where you're building assets that actually generate income to take care of you, they can't control you anymore. See, they can't threaten you with firing you when you got assets that generate just enough money, as much money as you're making on the job. They can't threaten you. See, they couldn't threaten me in my last probably 10 years of banking. I couldn't be threatened because I already had assets over here working for me, creating money. I had side hustles. I had my luxury watch sales side hustle, guys, was making 6 figures a year. My luxury watch sales side hustle. They ain't going near just as much money as I was making on my corporate banking job, base salary wise. I was making that flipping luxury watches online. So they couldn't touch me. I wasn't worried about going into work and them telling me something crazy or trying to treat me some kind of funny way. Didn't have to, because I already had 2 different streams of income. Plus I owned rental properties at that time too. So I had the rental properties, right? I had the side hustles. And guess what I was doing with that money? Putting it into more assets. That's what I'm trying to get you guys to understand. And the only way we protect ourselves from any financial downside is we have to have assets. Look at these people with these 401ks, man. You know why these people have to liquidate? They're liquidating, guys, because they don't have enough money to buy the basic things they need to live. They're liquidating because they're living on more than what they make. They're living on more than what they make. Why is that? Because people do not have their financial house in order. They're living in the matrix. They don't have their financial house in order, and they're living in the matrix. They're living a life to chase things. Things mean more to them. Things mean more to them than getting themselves financially in a position to own assets that generate income to take care of them. For them, it's about things. They find their self-worth in things, which is definitely what the Matrix wants you to think. See, the Matrix wants you to think a house, these cars, these luxury trips, sending your kid to private school, all of that stuff. They want you to think that is success. If they can get you to think that way, then you'll take every dime you make to keep that success. I'm going to make every dime I can make to pay for these 2 big old gigantic SUVs. Every dime I make to pay for this big old house that we really don't need. Everything I take to send my 2 kids to private school when they can just go to public school and get just as good at educate. See what I'm saying? That's the trap of the Matrix. But that's all to do what? To prevent you from taking your money and moving over here as an investor and building wealth. That's the whole point of it, right? The whole point is to trick you up here between the 2 ears in the filter system that success means things. As long as they can get you to believe success equates to things, they're going to keep you broke and they're going to keep people liquidating their 401ks. See, I already told y'all, I wouldn't have liquidated my 401k. I just would have sold all that crap. I'd have put it all up on Facebook Marketplace and sold it. I'd have put it up on eBay and sold it. Sell it all. Sell everything, every piece of it, sell it and start over. That's what I would do. But most people ain't gonna do that. Why? Because their pride. Their pride. A lot of people's pride will not allow them to let other people think they're struggling financially. Their pride. So they rather keep mounting up the debt, keep shrinking the 401k, keep shrinking the savings, keep shrinking the taxable brokerage account. All of a sudden, you got nothing left but your wages. You got nothing left but your wages. You're backed into a corner. So when your boss go to acting crazy, or the company keeps demanding more and more and more from you for less and less pay, you got no other choice but to stay there because that's your only income. You got no other income. So your stress level goes up. Things start deteriorating at home. Yeah, that's how it works. Y'all know I ain't lying. Been there, done that. I ain't lying. Y'all know how it goes. 50% of the marriages in the United States end in divorce because of what? Finances. Financial problems. 50% of the marriages fail in the United States because of financial problems. Second marriages, try 70% of second marriages fail because of financial problems. I'm just telling you guys, it's a problem in this country. And it's reflected in people liquidating their 401ks. It's madness. It's madness. But I digress. Let's move on. Let's talk about what's happening today in the stock market. Because you know we got the Fed meeting Tuesday and Wednesday of this week. The Fed is meeting, and let's see, the anticipation. See, that's one thing I'm trying to get you guys to get a better understanding is that the stock market a lot of times does what it does based on anticipation, on what's coming. It may not be there, but if something they believe is coming that's good, the stock market will bounce. So a lot of times, anticipation is what fuels activity in the stock market, whether it be good or bad, right? It's anticipation, something that's going to be happening in the future. So let's see what the market is anticipating this week because of the Fed meeting. Stocks rebound after 2 weeks of losses as NVIDIA-led AI rally resumes. I keep telling y'all guys, these people are going to make robots and they're going to be able to do what you do. And y'all already know we live in a capitalistic society, and you know people going to get fired if they can get robots to do what you do because they ain't got to pay no robot no benefits. They ain't got to worry about the robot calling in sick. They ain't worried about giving the robot a 401k match. So they ain't got to worry about it in there. They ain't got to worry about that. They ain't got to worry about that. They get these robots in there. They ain't got to do nothing for them robots. They got to pay your benefits. They got to give you a salary increase. You're going to be calling in sick. You're going to be acting the fool sometimes at work. And these people don't have that. They're going to get rid of the human beings. And they're going to put these robots in. I'm just telling you now, it's coming. It's coming. Stocks rose Monday, led by gains in NVIDIA. See, that dang on NVIDIA, man. That dang on NVIDIA, boy. As Wall Street awaited a key artificial intelligence conference and looked ahead to monetary policy guidance from the Federal Reserve later this week. See, at the beginning of this thing, what did I tell y'all? What did I tell y'all at the beginning of this thing? I said, you got to watch the Fed because they're going to tell you what's coming in the future. See, if you know what's coming in the future, you can plan in the present to take advantage of the future. 1% doing that, aren't they? Didn't they? You want me to read it again? I just told you that at the beginning of this thing. Let me read it one more time for y'all that just missed that. I told y'all the Fed is going to tell you what's coming. And when you know what's coming in the present, if I know in the present what's going to happen in the future, I should kill it. I already know what the future's. I know what's going to happen in the future. If I'm in the present and I know that, I should be able to use that to build wealth. Let me read it one more time. Stocks rose Monday, led by gains in NVIDIA as Wall Street. Who is Wall Street? Who is Wall Street? One percenters. Just a code word for one percenters. Wall Street is one percenters. That ain't you and me. We're Main Street. Wall Street is one percenters. Main Street is 99 percenters. You don't hear him say nothing about Main Street in here, do you? You hear him say what? Wall Street. Wall Street awaited a key artificial intelligence conference. See how these one percenters do? They paying attention. Oh, they got an AI conference. What's going to come out of that AI conference that I can find out today that I can be better prepared for the future? What can I get from that conference? What information can we get as one percenters, Wall Street one percenters get, so that we can prepare and take advantage of what's coming in the future? And looked ahead to monetary policy guidance. That's the Fed. I told y'all they meeting Tuesday and Wednesday. What do you think that monetary policy guidance, all these old fancy words, all that means is the Wall Street, the one percenters are paying attention to the Fed because they know the Fed chair is going to give them forward guidance. They're going to give them clarity, and they're going to tell them what's going to happen with these interest rates over the next couple of years. And they're going to use that information today to get more rich. That's what they're going to do. The Dow climbed 65 points, or 0.2%. This was today. This is what the Dow jumped. I mean, it just jumped. Why? I keep telling y'all, anticipation. Anticipation. The market jumps on anticipation. Investors react on anticipation, right? The S&P 500 gained 0.9%. And the NASDAQ composite advanced 1.6%. So the market got off to a great start Monday, which is today. 11:07 a.m. Eastern time. The market running. What do they know we don't know, guys? What does the 1% know that the 99% don't know on a Monday at 11 a.m. Eastern time that has the market running? Running like a baby bull. What do they know we don't know? I told you that guidance. I keep telling y'all, these people ain't stupid. And I've always told y'all, if we just follow their financial breadcrumbs, we get rich too. But we got to follow their financial breadcrumbs to get rich, to get to the pot of gold, right? NVIDIA shares were up more than 4% ahead of the company's GTC conference. What is NVIDIA going to say to them people at that conference that got their stock price up 4%? What are they getting ready to download at that conference, guys, that you and I ain't a part of? All one percenters. All one percenters. What are they getting ready to tell the one percenters that got their stock price up 4% ahead of the dang on meeting? I keep telling y'all, guys, follow the breadcrumbs. Follow the financial breadcrumbs. The 1% will take you to wealth if you just pay attention and follow the financial breadcrumbs. NVIDIA shares were up more than 4% ahead of the company's GTC conference, where the chip maker is expected to showcase its latest inroads in artificial intelligence. Now, see, if I'm a smart guy or gal, now that I know that information, and before the conference, before they tell people what's finna get ready to happen, if I'm a betting man, I'd probably be going to buy me some NVIDIA right now. Because if it's good news, you know what's happening next. Going to the moon. Going to the moon. I'm not your financial advisor. I'm not telling you to go buy NVIDIA. I'm just telling you what the 1% do. Here we go again. NVIDIA shares were up more than 4% ahead of. See, that's the key word. Ahead of. What does ahead of means? It's something that's getting ready to happen in the future. Or they wouldn't have said ahead of. See, the meeting ain't happened yet. It's getting ready to, though. Right? So NVIDIA shares were up more than 4%. What does that up more than 4% mean? Anticipation that NVIDIA got something good to say. NVIDIA gonna say something pretty dang on good about their AI intelligence in this meeting. That's the reason the stock is up 4%, because what the 1% are doing, they're already buying because they think it's going to the moon after they announce whatever they're going to announce. Now, again, guys, I'm not your financial advisor. I'm not telling you to go and buy Nvidia. I'm just telling you what the 1% doing, man. Why in the world would the stock be up 4% this morning? Unless the 1% thought Nvidia was finna drop a bomb that would send their shares even higher. Why? You got to start thinking, guys. I'm just a guy who gives information. I'm not trying to tell you what to do. I'm just giving you information. Nvidia shares were up more than 4% ahead of the company's GTC conference, where the chip maker is expected to showcase its latest inroads in artificial intelligence. Analysts hiked up their price targets as the conference began. So analysts start hiking up the price target as the conference began, with Truist William Stein predicting 34% upside. You know who Truist Bank is? It's one of the, it ain't a big boy too big to fail, but it's a good super regional bank. One of their guys, one of their best and the brightest, has basically said there's a 34% upside in Nvidia. I keep telling y'all guys, oh, it's trading at $900 a share. That's too high. What do you mean? You got people out there saying Nvidia is going to go to $3,000 a share at some point. You got people saying Nvidia is going to be $1,500 a share by the end of this year. Okay, I'm going to keep reading. Shares of Alphabet rose 7% in their best day in over a year. Can somebody say Magnificent Seven? Is anybody in here in the chat can say Magnificent Seven? How long have I been saying Magnificent Seven? Since probably about October of 2023, I've been talking about the Magnificent Seven. So anybody that have been paying attention to me would know what's happening right now, what's getting ready to happen. I'm just telling you, shares of Alphabet rose 7% in their best day in over a year. After Bloomberg, see what I keep telling y'all guys? I keep telling you, see, it's always something, right? It's always something. That's why I keep telling you guys, you got to be in the market every single day, because we never know when one of these companies going to the moon. We never know when someone's going to come out and say something and then the company's stock is just going to go ballistic. We never know. That's why you got to be in the market every single day, right? That's why I keep telling y'all, in the market every day is where we got to be. We never know. Here's a case in point. Here's what I'm trying to tell you. Here's my point right here. Shares of Alphabet, check this out. Shares of Alphabet rose 7% in their best day in over a year after Bloomberg News reported that Apple was in talks with Google to include the company's Gemini AI, their AI artificial intelligence in their iPhone. Now, if you'd have been investing in Apple, oh, golly, it's down to $160 a share. What am I going to do? If this happened, guess what's going to happen to Apple stock? To the moon. You'd have been buying every day in the market like somebody been telling you to. You'd have been positioned. I'm just telling you guys, every day in the market is where you got to be. You can't be on the sideline trying to be a pro, a professional stock picker when you're not. Just get in the market every day. You never know when one of these companies going to be behind closed doors and cut a deal. And the 1% know though. Why? Because they're paying attention. We don't pay attention. All we want to do is be out here and be entertained and watching skits on Facebook and watching stupid videos on TikTok and stupid videos on Instagram. We ain't paying attention to what's really happening in the real financial world. All we want to do is sit around and watch stupid stuff on TikTok. It's crazy, man. The world is passing us by right now. These people are getting rich, wealthier, while we sit around here depleting our 401ks. We're around here depleting our 401ks because we ain't got enough money to pay for the basic stuff we need. But wealth is right here in front of you every single day, and a lot of us don't even pay attention to it. We'd rather go over to Facebook and look at a funny. We'd rather go to Facebook and look at a funny instead of paying attention to what's going on in the financial news. No, we want to go to Facebook and look at a funny. Let's go get a funny. I want to see a funny. I worked hard all day. I don't want to. But yet and still, we're cashing in our 401ks though. It's crazy to me. Let me read it one more time. Shares of Alphabet rose 7% in their best day in over a year, after Bloomberg News reported that Apple was in talks with Google, two big boy, too big to fail, just big boy companies. Two of the Magnificent Seven. Y'all know who Google is, right? Y'all know the proper name for Google, right? That would be Alphabet, right? Two of the giants. I'm talking about giants. Apple and Alphabet. Two of the giants are getting together with AI technology to put in the iPhone. Can somebody say game changer? I don't know. I'll say it. Game changer. Meanwhile, Super Microcomputer, another up-and-coming AI company, climbed 6% ahead of the company's first trading day as part of the S&P 500. Now you got Super Microcomputer in the S&P 500. How do you get in the S&P 500? You got to be one of the top 500 big boys in the country. Somebody might want to write that name down and go do a little research. Somebody might want to write down Super Microcomputer. They just got added to the S&P 500. So guess what? They must be one of the top 500 companies in America. I don't know. Maybe somebody want to go look that up and see if that's a good opportunity to get in where you fit in. Maybe somebody want to go look that up and get in where you fit in. Just saying. If you're trying to build wealth, that is. Now, if you want to stay broke and go to Facebook and look at funnies all day, then don't do nothing. But if you want to try to build wealth and get in front of this thing, all I'm telling you is, man, I'm giving you some information that you can consider. These moves come after 2 weeks of tech-led losses for both the S&P and NASDAQ composite. The Dow has ended the past 3 weeks with losses. The Fed's March Open Market Committee meeting is slated to take place this week. I just told y'all that at the beginning of the deal here, right? And let me give you a quick little FYI, just a little bit of pro tip. All you got to do, guys, is get your phone, go to the $1 trillion research lab. Go to the $1 trillion research lab and go ahead and set Google so that it gives you financial alerts. So you got to do. Go to the $1 trillion research lab, which is Google, put into Google to give you financial news alerts. If you do that, every time something happens financially that makes sense, that's newsworthy, you're going to know because they're going to ping you on your phone. And then you can read it right there and make moves. Instead of, but I guarantee if a funny come on Facebook, you ping for that. If a funny, a new funny on Facebook, let me get over there. Let me go look at Country Wayne. I know he's doing something crazy. I need a good laugh today. Okay. I would reverse that and put my ping. I want to ping from the financial news. So anytime something comes out, I want to be pinged so that I know how to move and become an investor. Forget Facebook, right? The 2-day policy meeting kicks off Tuesday and ends with an announcement Wednesday. See, I told y'all that earlier, right? See, it kicks off on Tuesday, but then the Federal Reserve Chair, Jerome Powell, Jay Powell, guess what he gonna do? He gonna have some comments at 2:30 Eastern time on Wednesday. Guys, don't miss those comments. It's gonna be a lot of gold in those comments. A lot of gold will be in those comments. According to the CME Fed Watch tool, the Fed funds futures are currently pricing in 99% likelihood that the Fed will leave the benchmark interest rate unchanged this week. However, the expectation for June cut ticked down in recent days to about 55%. So the market itself is saying, listen, guys, there won't be a Fed cut in the March meeting. But we believe 50-50, there will be a Fed cut in June meeting. So as an investor, what does that tell you? There's some opportunity in the stock market right now because we know Feds are not going to reduce rates. Not anytime soon over the next several months, next 3 months, there's an opportunity to buy discounted paper assets. I'm not saying NVIDIA is discounted, but it depends on how you look at it. I think NVIDIA is discounted because I think NVIDIA goes to $1,800 per share at some point here very soon, especially if they come out of this conference and this AI technology that they're introducing hits a home run. What's going to happen with Apple since they're going to partner with Google and put AI in their iPhones? What do you think happens to Google and what happens to Apple when two of the big boy, blue chip, magnificent seven get together? I don't know. You think Apple stock price might go up at some point? Maybe. Just a tip. Just a tip. This week's Fed meeting could determine the direction of the market, particularly if the Fed telegraphs. See, what did I just say earlier? Future. See, I said watch the Fed meeting because a lot of times the Fed is going to give you what they call forward guidance, right? They're going to give you forward guidance. Or they're going to telegraph what they're getting ready to do. Telegraph, right? They're going to point you in the direction of what's coming. I just told you that, right? I said forward thinking. They're going to give some clarity. They're going to telegraph, right? I'm just telling you exactly what they're telling you. But y'all might listen to them. Some of y'all won't listen to me on this, but some of y'all might listen to these folks here. This week's Fed meeting could determine the direction of the market. What is the market? Our financial markets. Our financial markets. One being the stock market, right? One being the stock market. This week's Fed meeting could determine the direction of our market, particularly if the Fed telegraphs that rates need to remain steady or even for just a bit longer, right? So what they're saying here, if the Fed comes out and says, and is real hawkish, right? And the Fed says, listen, guys, we're not happy with inflation. We're going to keep rates higher for longer. We don't see any decrease in short-term interest rates at any time soon. That ain't good. That's not good. That's not good. If they say that, right? Prices come down. Stock prices come down. Stock market comes down. Why? Because the Fed is telling you we're not reducing interest rates anytime soon. If they say that, that's not good. Now, if they come out and say, and they're a little bit dovish, and they say, listen, we still see a scenario where we reduce rates at least 3 times this year. We still see that scenario. We're just waiting on more data. That's good news. Now the market is going to say, okay, let's keep moving. Let's keep moving. So you got to watch this thing, man, because it's going to tell you what's coming, right? It's going to tell you what's coming. It's going to tell you what's coming. LPL Financial Chief Global Strategist Quincy Crosby, in a Friday note, said this: that could be what's needed to allow this market to absorb gains and consolidate before the new earnings season begins. A hotter than expected February core and wholesale inflation reading frustrated equities, which is basically big boy growth stocks, right? That's all equities are big boy growth stocks, and sparked anxiety that the central bank may be partially toward higher interest rates for longer before its policy meeting begins on Tuesday. Nobody wants to see rates higher for longer, guys, basically is what they're saying. Not the market. Let's put it that way. The market doesn't. The market wants these rates to come down. We'll find out on Wednesday what the Fed is going to do about that. We will find out on Wednesday. Right? We'll find out on Wednesday. Pay attention. I've given you guys a lot of good insight here. We talked about NVIDIA and this meeting that they're going to, that they're going to be rolling out some more AI. And if that AI is received with open arms, who knows where NVIDIA is going to go, guys? Who knows? Who knows where the stock price is going to go? That's why I keep telling you, I think it's a bargain. At whatever it's trading at today, somebody tell me in the chat what NVIDIA is trading at this morning. I don't even know what it's trading at, but whatever it's trading at, it's a bargain. So if somebody's in the chat, hit me with what NVIDIA is trading at currently right now. I'm just curious because whatever it's trading at, guys, it's a bargain. I just read you something where these people NVIDIA is let me see. So $888 a share is where NVIDIA. Y'all telling me that's not a bargain? Are you really telling me that's not a bargain? When I think last week it got itself up to $974. I think it topped out last week at $974, and today it's $100 cheaper. And you telling me that ain't a bargain? Come on, man. I don't know what y'all waiting on, man. As far as I'm concerned, I don't know. I also told you what's happening with Apple and Google. Somebody tell me what Apple's trading at today. Anybody in the chat, tell me what Apple is trading at this morning. And then we're going to get to our daily dose of crypto, and then we're going to get out of here. Y'all know we got to get that daily dose of crypto now. I got to get the daily dose of crypto. So for all you crypto fanboys, okay, 176. So Apple's up slightly, a little bit. It's up slightly a little bit. So 176 is what Apple's trading at. Again, do I think that's a bargain? I'm just giving y'all my opinion, guys. Don't be talking about, are you trying to give financial advice? No, I'm not. I'm not a CPA. I'm not a CFP. I'm not a licensed financial advisor. Just letting y'all know. But I'm giving you my opinion. 176 for Apple, what's finna get ready to happen, is a bargain, guys. NVIDIA is a bargain. Matter of fact, everything in the Magnificent Seven is a bargain. And that other one I showed y'all, what was the name of it? What was the name of that? What was the name of that other stock? That super microcomputer? Guys, if I'm you, if I'm trying to build wealth, if I'm trying to find one that might take off, if I'm trying to find something that's good that just been added to the S&P 500, I might go look that one up. I might put that one on the short list. I might want to go to the $1 trillion research lab and put that in the search bar and find out what's going on with that. What's Tesla trading at? 174? What's Tesla at? Anybody in the chat can tell me what Tesla doing this morning? Y'all know Tesla is on sale. Y'all already know that. Y'all already know Tesla on sale. All right, well, let's move on. Let's get our daily dose of crypto. Let's talk about our daily dose of crypto, and then we're gonna wrap this thing up. I appreciate y'all rocking with me. Let's get our daily dose of crypto. Headline reads, Ethereum plummets below critical levels. XRP on verge of catastrophic collapse. Solana is the only bullish asset on the market. That's the headline for this article that I'm reading on crypto. Ethereum plummets below critical levels. I don't know what that means, but we're finna read. XRP on verge of catastrophe. XRP on the verge of catastrophe. Solana is the only bullish asset on the market, right? Let's keep reading. Let's keep reading. The cryptocurrency market is in a problematic state. This is how this whole article starts off, guys. What have I been telling y'all? The cryptocurrency market is in a problematic state with key players, Ethereum and Ripple, facing significant downtrends, while Solana emerges as a beacon of bullish momentum. This divergence, its performance, offers insights into the current market sentiment and potential future movements. Ethereum has recently slipped below critical support levels, challenging the resilience of the bullish structure established over the preceding months. After reaching all-time highs ETH has encountered substantial selling pressure, leading to a sharp retraction in price. So what happens is, guys, you run these pump and dump, right? This cryptocurrency. Y'all know I believe all cryptocurrency is pump and dump. That's just my opinion. That don't mean it's true. I'm just telling you it's a Ponzi scheme. It's a pump and dump. There's no underlying value for any of this crap, right? So what happens is you run it. You pump it. And then all of a sudden the market rejects the price. So you pump it. And then it gets to a certain price and the market says, we're not going to pay that. So the market rejects it. And when the market rejects it, what has to happen? The price has to come back down till they find a price that the market will accept. Right? Currently, grappling with a $3,500 level, Ethereum's next significant support lies around the 3,300 mark. So 3,500 is basically where the rejection happens. Has to fall back down to an acceptable price, which this guy is thinking $3,300. Closely aligned with the 200-day moving average. So this is what this gentleman is thinking. He's thinking the $3,500 price point is being rejected by the market. So nobody believes, nobody wants to pump, nobody's willing to pay more than that for it, not consistently. So he's thinking it has to do what? Bring itself back down to around $3,300 a coin, which is closely aligned with the 200-day moving average. If Ethereum fails to reclaim its position above this threshold, the asset could see further losses, potentially testing the $3,000 a coin psychological level. I keep telling y'all, man, there is no underlying nothing for any of this stuff. It's whatever somebody will pay for it. There's no operating company. There's no Apple and Google partnership where Google is going to lend their AI technology so you can put it in an Apple iPhone. You don't have that in crypto. It's just whatever some other guy will pay more than you pay for it. I keep telling y'all that. This is all this guy's saying. Resistance for Ethereum is now forming at about 3,800, where the asset must break through to reverse the prevailing bearish sentiment. So he's saying the only way this thing keep climbing, you got to get it up to $3,800 a coin. Or it might keep falling. The volume profile shows thinning out at higher prices, which could facilitate a more rapid recovery if buying pressure increases. Then he goes on to talk about XRP's precarious position. Let's talk about them real quick. XRP's situation appears even more tenuous as it teeters on the edge of what some analysts are calling a catastrophe. So any of you guys out there in XRP, you may want to go batten down the hatches and find out what's going on with your little investment, because the bottom might fall out of it. So you might want to go do a little research and figure out what's going on with XRP, because according to this gentleman, XRP is struggling to maintain support at 58 cents level. A breach below this could trigger a sell-off, driving prices towards the next support of 50 cents. On the resistance front, XRP faces a hurdle at 65 cents, where previous attempts to rally were quashed by bears. Basically, again, they tried to run the pump up. The market the market rejected it. See, that's how these things work, man. You try to pump them. At some point, the market says no. And that's where the game stops, because it's only worth anything if someone's willing to pay more for it. So if I'm buying XRP and I'm buying it at, I'm buying it at 58 cents, but I wanted to get to 68 cents so I can make a profit. Ain't nobody willing to pay that. So I'm stuck. And if I'm not careful, it plummets to 50 cents, 45 cents, 35 cents. Now I'm stuck like Chuck, right? I'm stuck like Chuck in some investment that has no underlying value other than what someone is willing to pay for it. And if someone is not willing to pay me 60 cents a coin, I'm stuck like Chuck. I'm stuck like Chuck. That's where we're at, man. The moving average of XRP's chart are conveying, which could either signify consolidation before an upward move or prelude further declines if the price action remains negative. Traders are closely monitoring the 60 cents level. As a sustained closing below, this could signal a bearish trend in the making. Keep telling you guys, you better go do your research if you're looking at XRP, ETH. Here's the current sentiment in a nutshell, and then we're gonna end our daily dose of crypto. Current sentiment in a nutshell: the divergence in let's start over, Richard. The divergence in performance among these three assets is a reflection of broader market sentiment. While Ethereum and XRP suffer from bearish pressures, Solana strength is indicative of the market's appetite for risk and volatility. I don't like that. I don't like that word when associated with my investments. I don't like those words. I don't like those words. I don't like the words that he just used. I don't want that associated with my investment. I don't, the appetite for risk and volatility. I don't like that. But that's what you get with crypto. You got to get it. That's what you get with crypto, right? That's what you get with crypto. Words like appetite for risk and volatility. The sentiment is compounded by the move toward NFTs. God, Lord, don't let them start again. NFTs, DeFi, and other blockchain applications, areas where Solana has established a competitive edge. As Ethereum and XRP navigate turbulent waters, Solana's relative stability could be a sign of the market's shifting priorities. However, the interconnected nature of the cryptocurrency market means that a reversal in the fortunes of larger assets like ETH could have cascading effects on the entire ecosystem, including SOL. Just saying, guys, be careful. You got these little baby coins, got these little bitty coins, these little meme coins, these little bitty coins underneath Ethereum and Bitcoin. If Bitcoin and Ethereum tumble, you know what your little baby coin's gonna do, right? They're gonna tumble even worse. So if Bitcoin and Ethereum having problems breaking through a certain price barrier, if they are rejected, which they will be at some point, you can already see ETH already has been rejected. You see Bitcoin was already rejected. It was trying to get itself up to 75 a coin, 75,000 a coin. It got rejected at 73, tumbled all the way back down. I don't know what it's trading at today. I didn't even look at it, but somebody in the chat, tell me what Bitcoin is trading at today. Somebody in the chat. And then I can wrap this thing up and tidy it up and get us out of here. What's Bitcoin trading at today? Somebody in the chat. There you go. So Bitcoin is trading at $67,000 a coin. But it tried to get itself up to 73,000 a coin, and it was rejected. The market rejected it. See, guys, if it can't break through that $73,000, $75,000 a coin, if it continues to get rejected, what's going to happen is it's going to fall. The dump is coming. The dump is inevitable. The dump has to come because you got no underlying value for this thing. Nothing. You got nothing to support it. Like I said, you don't have partnerships. You ain't got Apple and Google. You ain't got NVIDIA going to some conference talking about AI technology that's going to revolutionize the AI industry. You don't have any of that with Bitcoin. There's nothing. There's only store of value, what somebody else is willing to pay. If I can keep the pump going, I can make money. If the pump stops, I'm done. All y'all at the top of the pump, all y'all at the top of the pump, I feel bad for you because you're going to be stuck at the top of the pump. If you can't break through where you paid, if you can't get a breakthrough, and this guy's telling you right here, it's going to be tough. He's saying it's going to be tough. Historically, when Ethereum has led a market rally, many alternative coins have followed suit. However, the decoupling of Solana's performance from Ethereum suggests that the market is starting to differentiate between blockchain projects based on the amount of risk those can offer instead of fundamental value. I don't know how you find fundamental value in any of the Bitcoin stuff, but I can't say Bitcoin, but crypto, but I digress. While Ethereum and XRP are showing signs of struggle, they can also present opportunities for high risk, high reward strategies. That's a nice way of saying roll it all on black, baby. You might as well go to Vegas. It ain't never played blackjack, ain't never played the craps, and just let it all out. That's basically what he's telling you. If you got the appetite, he basically saying, if you got the appetite for high risk, high reward strategies, or basically high risk, high reward gambling, you may be in the right place. While Ethereum and XRP are showing signs of struggle, they also present opportunities for high risk, high reward strategies. Should the market conditions shift favorably, Solana's resilience and bullish momentum position it as the hedge against the volatility of its larger counterparts. None of that sounded good to me. I'm gonna be honest with you. None of that sounded good. None of that said nothing about operating companies. None of it said anything about producing more product or services and you know, the bottom line increasing. I ain't heard none of that in there. All I heard was a bunch of stuff. I don't know what this guy was talking about, honestly. Other than high risk, high reward. If you're in that game, you're in the right place, basically. If you're in the game of high risk, high reward gambling, you're in the right place. I'm not in that game. I'm in the game of low risk, high reward. That's the game I'm in. I'm not in the game of high risk, high reward. I'm in the game of low risk, high reward. That's why I invest in stocks. That's why I invest in ETFs. All big boy blue chip. I'm in the low risk game with high reward. See, I'm in the game where I got the top 500 companies in America in my S&P 500 ETF that did a 20% ROI in 2023. See, that's low risk because I got the top 500 companies in America. That's low risk, 20% ROI, high return. That's the game I'm in. So for all you guys in that crypto game, this high risk, high reward game, good luck to you guys. You got some headwinds coming. You got some headwinds coming. You got hurricane force, Cat 5. You got some Cat 5 winds coming your way. Cat 5. And they ain't playing. So you better know what you're doing. You better buckle down. You better go get in you something that's gonna weather that storm, because you got a Cat 5 coming at you. You got a Cat 5 coming at you in this crypto world. The guy just broke it down to you. I don't know who this guy is, but he just broke it down and it made sense to me. So all I'm telling you is prepare yourself. Prepare yourself. We don't know what's coming, but prepare yourself if you're in the crypto world. For me personally, I'm preparing myself in the stock market world, in the real estate for income world, in the business world. I'm prepared, right? I'm in the market every day, 365 days a year. I'm in the market, right? I already got myself on the rocket ship, strapped in, so that any day that thing take off and go to the moon, I'm on it. I'm on it. I'm on it. Low risk, high reward. That's the way I build wealth, guys. Low risk, high reward. And I've told you what I do to do that. Now, it's up to you what you want to do. You can stay on the sideline, do nothing, and you get the same results you got in 2023. You get the same results you got in 2023. Or you can change some activities in 2024 and get you some different results. That's up to you. It's up to you. I've already told you what's going on with the 401k situation for the 99 percenters. A lot of the 99 percenters are cashing in their 401ks early. They're paying a 10% early withdrawal penalty, and they're going to pay ordinary income. So they're going to get hit over the head twice by Uncle Sam. Why? Just ain't planning right. See, we're living in a world where we value things more than we value freedom. We live in a world where we value things more than we value freedom. And that's evident in this article I read about the 401k withdrawals. That's evident. 40%. They said 40% of Americans have no retirement savings. That's almost 1.3. That's almost 130 million Americans, guys. If you do the math on it, we only got about 350 million people in this country. And all of them ain't even adults. Some of them are kids. So you got 350 million people in the country, right? And you got 40% of them with no retirement savings. Yeah, that's about 140 million people. No retirement savings. So what do you think gonna happen to that 140 million people when it's time for retirement? They get to the golden years. They hit a bump in the road. What's gonna happen to them? You think that limited Social Security gonna save them that I talked about earlier? It's limited, guys. It's a couple $1,000s a month if you're lucky. It's a couple $1,000s a month. We already know private enterprise, publicly traded companies, but they're considered private because they're not government. We already know the private sector is not doing 401ks. I mean, I said they're not doing pensions. They're only doing 401ks. They're doing no pensions. These people are saying, no, we're not taking care of y'all when y'all start working for us. It's not our responsibility to provide y'all a cushy retirement lifestyle. No, these companies ain't doing that no more. They ain't doing it. They're not going to give you no pension. The only people you getting pension from is, like I said, federal or state municipalities. And if you work for like you're a fireman or a police officer or a school teacher, that. But outside of that, you ain't getting no pension from nobody else. So 140 million of y'all right now don't even have no retirement savings. What a great time to start saving for retirement. Just like the lady said in the article, I don't care if you got $50 a month. Put it in something. Put it in something. I don't care if it's $50 a month. That's a start. You need to start changing your behavior with money. I don't care if it's $50 a month, guys. You better start doing something today. Or you're going to be in that 140 million people that's going to be really, really hurting if you hit any financial bump in the road. Because I guarantee you, if you ain't got money in retirement right now, you ain't got no emergency fund either. You ain't got no personal savings either. Most people don't, right? Most people don't. 140 million out of 350 million people. Whew, that's a lot of people, man. Almost 50% of the population got it. Matter of fact, I think it is 50% of the population because guess what? I told y'all out of that 350 million, how many of those are children? About 35 million, 30 million, something like that, are kids? Somebody do the math on it. Hit me in the chat with it. Of the 350 million people in this country, how many of them are children under 18? It's telling you, man, you got 50% of Americans don't even have no money in retirement savings. 50%. Woo! Thank God I ain't in that situation. I just don't know how you even go to bed and sleep at night when you don't know, you don't even have no emergency fund. You're living paycheck to paycheck. High interest rate credit card debt. Got to change something, man. And it starts today. You can change it. You can change your financial circumstances today if you want to. But that's up to you. On this channel, we talk about solutions. 73 million are under 18, guys. That means like 60%, 65% of Americans over 18 don't have no money in retirement savings. You got 73 million of the 350. Let me do the math on this, man. This is just insanity. This is insane. 350 minus 73 That's 277. That's 277 million. So 277 times 40%. Wow. Wow. Guys, that's insanity. That's insane. You got like 65% of Americans don't have no retirement savings. That's insane. But having said that, what do you need to do if you're a person who's in that 40%, right? What can you do? Well, the first thing you got to do is take a look at your income, right? That's the first thing you got to do. And you got to figure out, am I living on more than what I make? And if you are, then you got two choices, right? You got two choices. You can make more money and keep your expenses level, but make more money, and now you're living on less than what you make. Or you can go sit down, look at your expenses, and just take out all the stuff that you really don't need. Because all of us have crap in our expenses that ain't really a need, it is really a want, but we got it in there. Take all that crap out, throw it out. Right? If I'm making $3,000 a month and I'm spending $3,000 a month, I guarantee you can go in that $3,000 a month you're spending, and there's $1,000 in there that you don't need, that you can save. Those are the only two ways. You make more money, keep your expenses level, or you keep the same money and you go to your expenses and you decrease your expenses. Those are the only two ways, guys. You got to make a decision though. Now, once you do that and you have money left over, then you have to dedicate that money to buying assets instead of things. You got to dedicate that money to buying assets instead of things. How do I do that? Well, hey, down in the description box is a brokerage app. And it says it's the Moomoo brokerage app. Right? You click on that link, you open up a Moomoo brokerage account, you put $100 in there, they're going to give you 5 free stocks. You put $1,000 in there, they're going to give you 15 free stocks. Now you're positioned, right? Now you're positioned to start buying assets like the S&P 500, ETF. You can buy a total stock market ETF. You can buy any sector ETF, whether it be healthcare, tech, real estate, energy, consumer discretionary, anything. You can buy any individual stock that's traded on our stock exchange. Remember, we talk about that super microchip or whatever it was called. That company we talked about that was just being added to the S&P 500. We talked about that company. Yeah, you can buy that company as well. You can buy that company through the Moomoo app. You can buy NVIDIA through the Moomoo app. You can buy Apple, Google, basically Alphabet through the Moomoo app. Right? So whatever money you have, you got to be consistent though. You got to say, well, okay, I'm going to open this Moomoo account. I'm going to put me $1,000 in it. I'm going to put $100 in it. Whatever you put in it. Right? You put $100 to 1,000. Let's just say you put 1,000. I open up my Moomoo account. I click on that link down in the description box. I put $1,000 in there. Boom. They're giving me my 15 free stocks. So now I got my $1,000 in there plus my 15 free stocks that have a value to them. Maybe that value is $100 for those 15 free stocks. So now you got 1,000 in cash and you got $100 worth of stock. Now I got a decision to make. What do I do with my 1,000? I want to keep investing to build more wealth. So then you take the 1,000 and you start investing into something like an S&P 500 ETF. The one I invest in is called SPLG. It's a big boy blue chip S&P 500 ETF that tracks the S&P 500 index. So I start taking that $1,000 a month and I put it in that every single month. Every single month, I put it in my Moomoo account. I buy SPLG. Every single month, I put it in my Moomoo account. I buy SPLG. Every single month, every single year for 10 years, I do that. I get an 8% rate of return over that 10 years. Remember now, every single month I'm putting $1,000. Where did I get the $1,000 from? I either made more money, kept my expenses low, or I kept the same money I was making and went in and pulled out $1,000 worth of crap that I don't need, which all of us have in our budget, and I threw that away. I said, nope, I'm not going out with the guys anymore partying. I'm not going to the beauty salon. I'm not going to the nail shop. I'm not going to the Burger King 10 times a week. I'm not doing that. I'm not doing it. I'm gonna cut out my 15 streaming services that I pay $200 a month for because I want to pleasure myself all day and all night and feel good. No, cut that out. Now I got $1,000 I can take and do what with it? Put it in SPLG every single month. Oh, golly, what do I got to do it for so long? Because if it was easy, everybody would be rich. You wouldn't have almost 150 million people with no retirement savings if it was easy. It ain't easy. Anything worth having in this world is worth paying the price to have it. It ain't easy. But if you want to be over here in the matrix for the rest of your life and looking forward to a $2,000 a month Social Security check, stay over here. I want to be over here. I'm going to be over here as an investor, building wealth, controlling my own financial destiny. So I'm taking that $1,000 a month. I'm putting it in SPLG. That's all I'm putting it in. Well, isn't that concentrated? Well, why would you diversify it? Well, guys, I got zero. I don't have $100,000 or $200,000 or $1 million. I got zero. What am I going to diversify? I got zero. I got no money in my retirement savings. I need to put it in as aggressive as I can put it in. It'd be one thing if I already had $1 million and I'm trying to get diversified, but I'm broke. What am I going to diversify? 0 minus 0 is what? 0. No, I need to be in the top 500 companies in America because I'm looking for growth. It's already diversified because you're in every industry and every sector, and that 500 companies represents every industry, every sector. It's already diversified. Plus, I need growth. Remember, I'm broke. I don't have $1 million. I'm broke. When I get to $1 million, then I'll diversify. But let me get to $1 million first. Let me get to my pot of gold at the end of the rainbow, then I'll diversify. So I take SPLG. I take that $1,000 a month, every single month like clockwork, because that's the commitment, guys. That's the discipline. That's the consistency. The 10 years is the patience part. See, we got a discipline part, we got a consistency part, and then we got a patience part in all of this, right? The discipline is I got to manage my money correctly, so I got $1,000 a month left over. That's the discipline part. The consistency part is me taking that $1,000 a month for the next 10 years and faithfully putting it into SPLG like clockwork. That's the consistency part. The patience part is what? I got to wait 10 years for it to grow. Yeah. If it was easy, 150 million people would be doing it, but it ain't easy. But we don't want it easy because we understand anything worth having in this world is worth paying the price to have it, right? But if you do that for 10 years, here's my point, guys. If you do that for 10 years, you got $250,000 in your nest egg. I don't care if you make $3,000 a month, $4,000, I don't care. All you need is $1,000 a month freed up. You do that for 10 years at an 8% rate of return, you got $250,000 in your nest egg. That's freedom. Yeah, right. And I'm going to learn a bunch of stuff along the way. I'm going to learn how to change my mindset and not take my money and spend it to make the 1% wealthy. See, all these things are going to change as I see my wealth start to grow. Why? Because once I see my wealth start to grow, I'm going to want more of it. So I'm more willing to change. Yeah. Once you start seeing that thing compounding, it go to compounding, man. You be dancing with it, boy. You be, ooh, dude, golly, man. I see that thing going up. I'm gonna put more in. Ooh. I see it going up. I'm putting more in. Let's keep putting more money in. Keep building that wealth. Forget the 1%. I ain't making them wealthy. I'm gonna make myself wealthy. I'm gonna put the one. Nope, I can't mess with the 1% no more. I'm gonna make me wealthy. That's the attitude you're going to have once you see that thing start to compound it. That's how it works, guys. But it starts with that $1,000. It starts with that moo-moo account. It starts with clicking on that link, open up your Moo account, and go out on a limb and say, you know something? I'm gonna do this $1,000 a month if I don't do nothing else. And I'm gonna do it for 10 years. Because I believe if I can do it for 10 years, $1,000 a month, I'm gonna have $250,000 in my nest egg. And guess what? That changes my whole financial life. And what I'm telling you is once you see that $1,000 go to work, guys, and you be patient, you'll put 2,000 in. You'll put 3,000 in. You will. You put $5,000 a month in every month for the next 10 years at an 8% rate of return. Let me tell you what you're gonna have in your little nest egg. Let me tell you what you're gonna have in your nest egg. Let me tell you what you're gonna have in your nest egg. If you do that, $5,000 per month. Let's do this here. If you do $5,000 a month at an 8% rate of return, that's $60,000 a year. Now, I know for some of y'all saying, man, I can't do that. Guys, never speak negative into your life. Never speak negative into your life. I told y'all words are powerful. Don't never say you can't. I told you to replace that with I can. So $60,000 a year. In 10 years, at an 8% rate of return, you got $870,000 in your pot of gold at the end of the rainbow. Yeah. Well, where am I going to get $5,000 a month from? Side hustles. Start your own business. Do whatever you got to do. That's legal within the law. That's where you get it from. Where do you think I got it from? I started luxury watch sales with $100. I bought one watch for $100. Within 5 years, I was making $100,000 a year flipping watches online, part-time. See, you got to replace I can't with I can. I knew nothing about watches. Knew nothing. All I had was $1 trillion research lab. Google. Wasn't no course. Wasn't nobody that held my hand and skipped me down the yellow brick road to go see the Wizard of Oz. None of that. Just me and the $1 trillion research lab. That's all I had. Joined a couple watch forums, and that was it. Once I saw them other guys on there doing, I said, if they can do it, I can do it. See, you got to replace that I can't with I can. Once I see them, I can. They ain't got nothing on me. Whatever they know, I'm going to know. That's how you change your game, man. See, once you start building wealth, guys, and you see the effect of that wealth building, you're going to change the game. You're going to change your mindset because you're going to be like, oh, my goodness, this thing is crazy. You mean to tell me I got 100K in there already? You mean to tell me I got 400? Once it starts building, guys, I'm telling you, it will change your mindset. But you got to get in the game. You got to learn the rules to the financial game. You got to learn the plays to the financial game in order to be able to play. I just gave you the blueprint. I just walked you through what you need to do. That's all you need to do, in my opinion. I'm not your financial advisor. I can't tell you what to do, but I'm giving you advice. I'm giving you a recommendation. I'm giving you a recommendation from a guy that's not a CPA, that's not a financial advisor, that is not a CFP. I'm just a guy that done this for 25 years exactly the way I told you. That's all. I got skin in the game. 75% of my net worth is doing exactly what I'm telling you or recommending that you consider. 75% of my net worth is doing that right now. And in the next 10 years, it's going to double itself. It's going to double itself. Just on that little blueprint I just gave you. Nothing fancy, just $1,000 a month, every single month for the next 10 years. Get an 8% return on average. Boom. All right, guys, I appreciate you, man. I got to get out of here. I got a couple more things I need to do. I appreciate y'all rocking with me. Thank you so much for stopping by the channel. Hopefully you got some information that's helpful, that I pointed you in the right direction. Here's the deal, guys, and then I'm out of here. I'm going to provide you what's happening in the world and finances, whether it's good, bad, or ugly. The key, though, is I'm always give you solutions at the end so that you can take those solutions and do your thing. But you do need to know what's going on in this world, in this financial world. Don't bury your head in the sand. Know what's going on. And this is what I cover, is what's going on. 150 million people don't have no retirement savings. That's real. And a lot of y'all are part of that 150 million. A lot of y'all are part of that 150 million. But I just gave you the plan to get yourself out of it. Just gave it to you. Boop, right there at the end. So hopefully some of you will listen to that, take heed to that, and change something in your financial life, right? Get yourself out of the matrix. Get yourself over here as an investor so that you're doing what? Buying assets and building wealth, and not over here in the matrix, buying liabilities and creating debt. That's it. All right. Lock it in with a thumbs up if you don't mind before you get out of here. I appreciate y'all. Y'all know I'm back tomorrow, 10:30 a.m. Eastern time. I'm every day, Monday through Friday. I'm on Saturdays and Sundays as well, but we change it up a little bit on Sundays and Saturdays and Sundays. We don't be as intense. We kind of talk about wealth building and that kind of stuff on those 2 days. But Monday through Friday, I'm giving you the meat and potatoes. I'm giving it to you real, but then I'm coming in behind that with solutions to help you get where you need to get to. So lock it in with a thumbs up. Hope to see you guys. Okay, guys, it looks like I lost signal a little bit. Let me get out of here. All right, man. Appreciate y'all. Thoughts become things. This internet. All right, guys, thought become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy. I'll catch you guys on the next video. Peace. Boy, this crazy internet.